What's up, everyone? Hey, it's my mortgage guy, Greg, here with your Wednesday wishes on what I wish I knew about the mortgage process. And listen, in the state of Florida, when November 1st comes, property taxes are due. So if you're purchasing a home, you might find in the month of October or November, you might find that 1 year of property taxes is being collected on your final closing disclosure or any estimate that you have because, well, you want to know what's going on and your numbers should be ran correctly. And we have to calculate that figure into your estimates. Now, why is this? That's because, again, November 1st property taxes are due, and typically lenders want those taxes paid November 1st. If every month you wait up till March of the following year, it costs a little bit more. So November 1st, those taxes are typically paid. Now, what happens is you as a buyer, if you're purchasing a home, you're getting charged for the 12 months. Don't worry, that's only on your estimate. Right before closing, the title company and the closing department get everything together, and the seller is going to give you a credit for the time that they are in the house or that they own the house from January 1st of that year, good through closing day. And then you will take care of the rest from closing day until the end of the year. So you do have to pay a little bit up front with those property taxes to make sure your portion is paid for the year, and then you get that seller credit for the time that they've owned the property. And it has to happen no matter what. So in October, for sure it's happening. In November, you have to get proof to see if those taxes have already been paid. If they haven't, you're gonna get stuck with that situation of paying them up front, again, for the full year on your numbers, and then you get the seller credit to kind of deal with their prorated amount or their portion that they owe. On a refinance, same thing is gonna happen, guys. The taxes are due. So if you're refinancing in the month of October, even September sometimes, because there's a payment break, you don't make a payment until you skip a month, and then the following month your payment's due. So there's a time that those taxes are going to have to get paid because a payment's going to be due. And depending upon when you close will depend on if those taxes are actually covered or being paid. Again, if for the refinance, you're most likely to have to pay them. And then look at your escrow account. So whatever's currently in your escrow account, that money is going to get refunded back to you within 30, 45 days. Now, obviously, if you went past November 1st, your lender at the time should dip into that escrow account and pay the taxes. So then we have to get proof that it's been paid. But if they have not been paid and there's no proof of it, even on a refinance, you're going to have to pay the full year of taxes. And again, this is on you now because you're the one who owns the property. So you'll pay the full amount through the refinance, and then you'll just get refunded from your own escrow account. Look on your mortgage statement. You'll see what's available, what's your balance in your escrow account now, and that full amount gets refunded to you. Have a good one. Talk to you soon. Bye-bye.